All right, there we go, guys. Sorry for everybody out on social media. I was trying to get this thing working. I had buttons that needed to do certain things. Okay, so we're up and running again. Welcome to everybody out there on Facebook, YouTube, and X. And then we also have the Moxie Room here. I was with you guys just 20 minutes ago, talk about the market this morning. And talk later, or TLDR, talk later, didn't read. Basically, the short story is I am looking for the market to have bottomed in through here. And I think if we can hold, then we should start repairing and we can at least start to kind of drift our way back up. Now, of course, we always are excited about the idea that we can get a short squeeze and if the bottom's in and maybe we get some sort of good news that maybe we get a big spike up, and that would be awesome. But I think we should also be prepared that that may not happen. This market still is kind of stunned, and there's still a lot of news coming out, and people are just probably not entirely too eager to hop right back in. So I don't know what kind of move we might be getting, and so I'd be looking more at a kind of a play or a direction where if the market just stops going down and kind of starts drifting up, even in a very messy way, that would still be beneficial to us. So basically what we did is we did a put credit spread for a few weeks out. I've had some comments that people thought, man, maybe should be a little bit quicker, but it's like, I don't know how long this thing's going to take around. And the last time we saw the market move back up from here to here, it was 14 days. So I don't want to be too tight with my strategy in through here. And so I do have the idea that I think that the market, can we aim for 5,400? Part of the reason I'm doing that is because I think that would be a gap fill. And then I have a feeling that the 21 EMA will be about 5,400 in the next few days. And that's generally my target of what I look for. So let me know. I've got a bunch of eyeballs over there. I see you guys coming into the room and growing over at Facebook, YouTube, and X. So if you guys have any questions, let me know. Mike, I got nice dot there. I don't know if that was a keyboard, a fat finger type, but nice period. So this is kind of what I'm looking for. And part of the reason that I'm thinking this is that the market is extremely oversold. We've had record down days. I can't tell you all the things I've been seeing on X about, it hasn't been this bad since blah, 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 or it hasn't been this big of a move since blah, 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 or it's been -4% down days back to back, and we haven't seen that since whatever. So a bunch of records are being made. And including, we even had a record of like the most gap open and then the biggest move to the downside. There was something like that happened. So we got all that. And we had more tariffs come out on China at midnight last night. And yet the market double bottomed. So I'm starting to lean towards that. I want to see if this if this low starts to hold, because hey, this is a good first situation. I think a lot of people kind of got scared and panicked out of yesterday's situation, but really for the Moxie crew, we were prepared for this. In fact, if I take a second and we can scroll back up to yesterday's morning, what was today? Yesterday was the 9th. So actually today's the 9th. So yesterday was the 8th. There we go. And so what I can show you guys here is this is the exact morning alert that I gave to the Moxie group. And if you look at this is exactly what I was spelling out for today. And so if you're looking through here, let me get this. So eventually the next move I will be anticipating is a pullback into the 15-minute 50. Well, we got that right here. So I wasn't sure exactly when it was going to happen. I didn't know if it was going to take a day or two. It took one day. So yeah, that was it. But right there, pull back into the 15-minute 50. And then the other one that I was looking for is, remember, this is the elf shoe pattern. And on the hourly chart, since price will be opening at the hourly 21, which is generally the arch of the foot. And that's exactly what price did here yesterday. We opened at the arch of the foot at the 21 EMA. And because of that pattern, because of the things that I teach with the Moxie indicator, we were expecting that price should come back down. The question is, was it going to hold for a day? And then because of the news today, would it come down? Or, were they going to drop it up here and drop it down because they knew coming into today with the news, nobody wanted to be long. And so that was basically a pop and flop situation. But it did still fill our pattern. So we're looking at that. We're looking at the elf shoe. We're going to see if this double bottom starts to hold. I've given myself time to make sure that that works, just in case we don't know, how long this thing takes. Because again, if we look back here, the area that I was looking to go long generally was here, and we still took a dip. And then you can see how much work it took before we finally got our pop to the upside. So give yourself the gift of time, I think, in a situation like this. And then we do have CPI tomorrow. We have PPI, I think, the next day. And then we'll just have to go along for the ride and see what this is doing. And basically across the board, what we are noticing are these kind of double bottoms. Remember, they are not guaranteed to work. It is just one of many clues of the puzzle that we're trying to find. If you guys remember, basically this double bottom the last time did not hold. And so what we're trying to do is figure out if this double bottom is going to hold. So it's definitely a work in progress. And I think today seems kind of muted. The market's kind of been whipped around over the last couple of days. Gosh, last week we all know the tariff news came out and really ripped the market down. Then on Monday we kind of had a gap down, flush out, we rebounded. Then we had a gap up. Then we had a huge down day yesterday after that. So the market's just kind of like, ugh, can we just not do anything for a day? And so if you look at the internals, you can see that's kind of how it's feeling. It's just kind of middle of the road, very, very mixed, very mixed, very mixed. And so we're going to have to see what the market wants to do tomorrow with the CPI numbers. Of course, I think the Fed is between kind of a rock and a hard place. If they, the theory is that if they lower interest rates, well, that's going to exacerbate inflation. And basically that's what they're all wondering is, hey, what's going to happen with inflation? I'm kind of thinking that a couple things. Number one, the tariffs have not been instituted yet, so I don't think on this CPI report we're going to be seeing too much as far as that goes. And number two, I think the fact that the market has gone down so much is going to act as kind of a natural suppressant for inflation, for the economy as a slowdown. Because you kind of think about it, people right now are looking at their 401ks and they're not feeling very wealthy, are they? They're like, oh my gosh, this just happened. This looks bad. People are going to be tightening up their belts and looking at this, be like, whoa. And then they're kind of looking at the economy and then, everything is like, oh my gosh, what's going to be happening? And on top of that, remember that inflation primarily is a government spending issue. And so we've had a lot of government spending over the last few years, which kept the market up. And now, we talk about the Doge thing. Basically the new administration is talking about trying to shrink government. They're trying to get things back into order. If that happens to work, if they do follow through with this kind of stuff, then basically they're taking the punch bowl away from the party. And so the market also understands that they might be spending less on things from the government. And if that's the case, then the market is like, oh no, we're taking away my money. And so that is going to be a thing. We all know that the market also goes up when the government prints money, when the government spends money out there, tries to stimulate the economy. And right now it basically says that the administration is trying to do the opposite. They're actually trying to rein things in. So we've kind of got this perfect storm. That's why the market has gone down so much, because between Doge, between shrinking the government, between trying to spend less and then the whole tariff situation, the market's just like, okay, everything is shrinking and we don't exactly know where this is going. So everybody just kind of pulled the plug. So I think that's going to have a natural, again, this is my opinion based on what I kind of know and see out there. But I think that this is going to kind of have its own natural effect on inflation. And I think will kind of help keep a lid on inflation. So I'm not too worried about those numbers. We'll see if I'm right or wrong tomorrow and in the coming months as we keep getting numbers. But I think that the market coming down like this, people are going to think twice about maybe spending for that new pool or something else like this. Because you even think wealthy people, they suddenly took a hit. If they got wealthy people usually have a lot of their money in the market, and we're down 20%. And so their stuff might be down a little over 20% and all that stuff. So everybody's kind of feeling the sting, and it might make people rethink spending on stuff. And so think about inflation that way. We'll see if my theory is correct, especially tomorrow and in the coming months, and we'll just kind of go from there. So that's my thought on CPI. And then also just the fact that this market is so far down. I mean, we come over here. Let me get the right screen. Here we go. Oh gosh, I have too many. I've been working on building classes, and so I've just had so many screens up here. Yeah, we look at this, look at the NASDAQ. We are at least down into some pretty key levels. For right now, I feel like it's going to be a little bit hard to keep pressing this thing lower. Yes, we could keep going lower into the future, but I'm still kind of looking for that bounce first. Now, we know that in bear markets, some of the biggest up moves are during down markets. And you can see here, we are just outside of the third ATRs on so many things. I mean, even in the bear market 2022, we didn't go outside of the third ATR. And now we are really outside of the third ATR. The other thing we can kind of look at and talk about, and let's see, right here. Let me refresh this, see if anything's changed. I doubt it's changed today. Yeah, look at this thing. We have breadth has basically fallen off a cliff, which is pretty incredible. The number of stocks over their 20-day SMA is 2%, and the number of stocks over their 50-day SMA is 5%. It doesn't get that much lower. Of course, we've seen things like 2%, but man, 5% is pretty far down there. And so everything is pretty much down. Everything is smashed. And now we're just trying to figure out, how much further do they want to go? And then hopefully we start getting a little bit of a bounce and a rebound. The other thing that we can look at is new highs, new lows. Here are the new lows. They definitely spiked. And of course, everything's we're looking for this to kind of recede at some point. Just to put this in context, let me go back. Let's see how 10 years. Let's see if this kind of can show it. So there, just in context, we were up to like almost 600. And you can see that during the bear market, we got to about 600. Obviously, COVID was huge. The world was ending, that kind of thing. And then this was when Jerome Powell was starting to increase rates when the market wasn't prepared for it. That had got almost to 800. And then even back here, what was it, 2015, 16? We got to 600 and 800. So we're close. We're close to up there. And that just kind of shows you that I'm still looking for a bottom to be in somewhere around here. Just everything is so smashed that I would be a little bit more nervous to be on the short side at this point. I feel like the bears have definitely been fed. They got what they want. And now they probably need to be careful. So I don't know if today is going to be the turnaround, the massive turnaround day. Today just kind of looks like it's still going to be kind of settling in here to make sure people actually feel like something's happened or that this is a low. And we'll have to see if that starts to recover. But we've taken an initial position with a put credit spread, given us some time, and we'll see if that starts to work out. All right, Jason, so if we're looking at TSLL starting to show daily divergence, a little bit, but remember, right here, I'm not really looking at the daily Moxie indicator. Okay, this is still just so far down that it doesn't really matter. Yes, I've had subscribers and people who use the Moxie indicator. They do look at when the color changes, and that can mean something. It's just not part of what I use. So it's nice, it's informative, it's got something there, but really what I'm looking at is the hourly chart and the 15-minute chart to help tell me if something's happening. So the important thing that I'm seeing, that I'm taking away with, well, I don't think Tesla is here, but TSLL, and that's the difference between a leveraged ETF and the original underlying. We are seeing a potential trampoline move here on the hourly, which if this starts to work, that's going to be great. Because what we're seeing here is an overall double bottom. And then we're seeing a double bottom here. So we're kind of seeing a pattern within a pattern. And within this double bottom, the Moxie indicator is still above zero. But we're still waiting for the 15-minute to do something. It's still not quite there yet. It's still trying to get itself figured out. That's kind of what we're waiting for today. We have CPI tomorrow. We'll see if that actually kind of gets the wheels going to the upside. And if we look at actual Tesla, you can see the picture is just a little bit different. So this isn't terrible. But so far, the trampoline setup here, that's why I have to say potential. It has not triggered long. But if this happens to work, to where this is a double bottom, and then it starts to move back up, we should see the Moxie indicator turn green and get back over zero basically right away. So it's pretty close to being a trampoline move. It's just not official. And that's what we're kind of waiting for, is to see if this thing actually starts to come back around. But yeah, I think Tesla is looking fairly good with this overall double bottom in through here. It's actually held up pretty well over the last few days. The other thing I like to look at is FNGA. I mean, yeah, you just look at this and pretty impressive, for what the market has done as far as new lows. Tesla has basically made a double bottom. So yeah, I would be looking at that. And same thing, we're very oversold in through here. We're trying to see if this level starts to hold. I am starting to see some divergence here on the 15-minute Moxie indicator from this double bottom. And now we just kind of have to wait for follow through. That's kind of where we're at today. As I said, doesn't really feel like it's going to be much of a day. You look at the internals and they're still kind of neutral to weak. And so I think today is just going to be like a settle day between the last few things. I mean, this market has been all over the place for the last few days. But I am encouraged that the market actually held up based on the tariff news. Everyone knew it was coming. They knew it was coming here. They knew it was coming here. And now we have it, and the market didn't crash even further. So I'm going to look at that as generally good. And now we just have to wait. Have to be patient in through here. Let's see, Andy, let's take a look at spot gamma. I wasn't really seeing too much that I could work with. I'll come over here real quick. For those of you out there on the social media, so YouTube, Facebook, X, this is Spot Gamma. We also have what's called GexBot. They're great software programs that we associate with, and they show you where really big option, like 0DT option positions are, so gamma. And a lot of times it will tell you either where price is likely to go, or it can act as a magnet, or it can act as resistance. It's really pretty neat. And then just like we have order flow, or we have internals for the S&P based on stocks and order flow ticks, you could do the same thing with options. So that blue line back there is basically the order flow of options. And so if it's net positive, like net calls, you'll see it move up. And if it's net puts, you'll see it go down. And you can see it today, again, very kind of neutral. It is starting to turn up a little bit, so that's good, but basically still kind of neutral. The other thing, let me back this up because you can do, it's not really showing up. I don't know why it's not here, but what I was seeing is that the implied one-day move up and the implied one-day move low was basically here and here. So yeah, the range today already based on gamma was going to be very muted. So you can see here our key gamma strike is right here. It just looks like it's going to be a mostly sideways day. I'm hoping for a little bit of recovery because again, I think that the low is trying to be built in here. There is a node up here, but that doesn't necessarily mean anything. And there's a node here. So I'm kind of just seeing this kind of spread between stuff. And then GexBot is, I just don't think GexBot is really showing us anything today. Yeah, there you go. It's a little better. Let me kind of squeeze this down. I mean, you can see our net Gex is barely positive. So it really kind of feels like a sideways day. Plus you can see here, the amount of negative to the amount of positive is about equal. It's slightly more on the positive side. So that's why I'm kind of leaning upwards. But yeah, there's not a whole lot. I think today is a sideways day. Market's probably waiting for CPI information tomorrow. And also everyone's just being like, can we take a moment, please? Can we just rest? And that's what it feels like. So that's my idea. I'm leaning to the long side. Yeah, we've had huge down days. And now that fact that we've double bottomed, I'm kind of looking at that. And if we do start to move up, this 15 Moxie indicator, I'm going to say it now. And what we have to do is watch for it. Because remember, we can see clues, but then we need to make sure that they actually follow through. And so that's what I'm going to be pointing out is to say, hey, let's watch this. And if it continues to work out, then I'm going to circle back and say that was our first clue and our first indication. If something else happens, then most likely this will fail. And I'll just say, well, it didn't hold up. But yeah, that's our first thing to note. And then let's see, Jason, since you were asking about the daily divergence on Tesla and all that stuff, I will also just point out that we do finally have a green Moxie indicator here on the hourly chart. Again, I'm not going to be leaning too much into it because it's not really part of the rules. But what it does show you is like this every single day here, there energy and momentum was more negative. This is now the first day, and assuming this one paints like that way, which it most likely will, that's going to be the first day that it turns green. So not too much to work with, but it is something. And the reason why it's because you can see here, see how it just started going red, green, red, green, red, green. So it's not super important about that actually going green, but it can kind of start to show divergence. See how price was going down, see how the Moxie indicator started going flat. That was kind of the clue that we're starting to see energy and momentum turn up. And so here's also the other form of divergence that we're looking at. Notice how price went lower. Notice how the Moxie indicator made a higher low. Okay, so big picture, we are starting to see this divergence. And the fact that this went green today means that I can actually start demonstrating the divergence. Because if this were still red, if this were still red, excuse me, guys, if this were still red, then we don't know anything. It could still be red. It could still keep going down. The fact that it's green now could be the anchor for the higher low for the Moxie indicator. And now we can start working with it. So yeah, a lot of stuff that's starting to shift and that I want to be looking for. As I said, we've already taken kind of our one little play in through here, and then we'll continue moving forward on that. Let's see. And I think if I don't know if I have everything else up here, but I'll show you guys this. If you guys are interested, for those of you guys out there on the social medias, we still have the class open. Yesterday, I just finished teaching the 0DT option charting. SP looks like you had a good time in there yesterday. So it's kind of it's a nice small group because I've taught this class before and we had a bunch of people in that one. And so this is kind of like new people to the market, to Moxie and anything else like that. And so this is what we did. The class is still open. It's now recorded, but it's still open if you guys are interested. And then on the 16th, we're going to be teaching the third and final installment of this class for the Moxie indicator. It's going to be based on ETFs and leverage ETFs, especially now that we see all of these single stock leveraged ETFs coming out. This is what we're going to be talking about. And so if you guys are interested, it's going to be simplertrading.com/Moxie method. Let's see. And it has to be not capitalized. I learned that one because I was even using the capital Moxie method. And usually they have the redirects, but no, it has to be just regular Moxie method. So yeah, if you guys are interested, we're going to be doing that. And then you can see here, this is the webinar that we've talked about. We've put a few of those things out here. So 0DTE, we're going to be doing ETFs. And we're also teaching just the overall general Moxie method, how we trade it, how you use it. And yeah, it's been going well. Been having a good time out there. So we just want to make sure that you guys know that it's still out there if you're interested. And just come over here, simplertrading.com/Moxie-method. And the classroom's still open. All right, guys. And then, yeah, for the rest of you, I won't be here tomorrow. Just a reminder, we're going to be leaving today an hour early. Then I won't be around tomorrow. And then we have the class on Wednesday, the 16th. All right, guys. So I'll be back in the chat room. Let's see what today does. As I said, kind of feels like it's going to be a sideways day and we got more information.